GameStop is moving today. We are currently up 5% on this Friday at about a $12 billion valuation, $26. Do we think it's going to break 27 today? Just look at this bounce off the $25 range. The consolidation on this stock, it's been flat for the past couple years. Ryan Cohen has given us the signal, $21.55, $10.7 million. He bought $500,000 shares. Back in April, he purchased right here $21. Was that the signal to tell us that was the bottom? Ever since then, the stock is up 26%. Let's pull up some charts real quick. Currently on the monthly, the slow stocks just crossed. The MACD has also flipped green. Look at this consolidation right here. The net call premium just hit 1.35 million 20 minutes into the trading day today. So if the net call premium is high, it shows that traders feel positive about the stock right now, and they expect it to go up because more people are buying calls. If it's low or negative, it means more people are selling calls, which means traders expect the stock to go down or aren't even excited about the company. Anyways, according to FinViz, we're at a 16% short float. Let's check out FinTel real quick. Also showing 16%. Institutional ownership institutional ownership sitting at an all-time high. Just a couple things to review, guys. If we go to Seeking Alpha, financials, balance sheets, remember $8.7 billion in cash, while the market cap sits at about $12 billion. With the latest news on the warrant dividend, one warrant is given to the shareholder for every 10 shares that you hold. It's coming up next Friday. Is MOASS about to happen? Are the shorts trapped? The strike price of $32 on these warrants and not expiring till October 30th, 2026. These warrants will trade on the stock market under GMEWS. No cash will leave the company, no immediate dilution. So why did they do this? Why didn't GameStop just do a buyback? Well, because if GameStop does buybacks, it'll drain their cash. It's going to drain this $8.7 billion, and GameStop is trying to use this cash they're just holding and sitting on as a strategic weapon. This warrant approach preserves every dollar that they have until the market pushes the stock above $32. Once GameStop hits this $32, then they could raise another $1.9 billion more on top of this $8.7 billion they already have. They keep pushing up the floor on the amount of cash that they hold, which is causing the market cap to slowly climb up. A company can't sell below liquidation value, and right now their cash holdings keep growing. I mean, if you go back to 2020, they had $500 million in cash versus $8.7 billion. Just think about that. Basically, GameStop said, if you take us above $32, we'll happily sell you more shares, and we'll use the proceeds to go even bigger. It's a performance-style capital raise that only rewards success. This $32 strike price isn't random. If we go to the convertible senior notes that they offered earlier this year, equivalent to an initial conversion price of approximately $28.91 per share, this $32 currently sits above the conversion price of these convertible senior notes. This price is high enough to avoid instant exercise, but close enough to be realistic if the execution continues. This is intentional price signaling. And so viewing this as a shareholder, pretty much getting a free call option for GameStop with a strike price of $32. You could trade it if you want liquidity, or if you exercise it, you stay in control of your percentage ownership. The company gets more firepower, they raise more cash. And from a short seller's perspective, the short sellers will now owe the economic value of these warrants to whoever they borrowed the shares from. That means they're either going to want your warrants or settling in cash value, adding friction and potential costs to the short sellers. To sum it up, if GameStop would have issued a dividend, it sends cash out the door. If GameStop would have done buybacks, it shrinks the share count, but they lose their cash. But warrants, they plant a flag on the ground. It challenges the market to price the stock correctly and turn dilution into an asset for existing shareholders. If GameStop never hits that $32 for these warrants, then no dilution, no cash is raised, and nothing is lost. But if GameStop crushes it and they go over $32, they raise billions in fresh capital, $1.9 billion, and retail gets rewarded first. GameStop just gave the whole market a target price. They gave shareholders some leverage and short sellers a headache without spending any money today. And so this is how you play offense as GameStop when your company is getting shorted like crazy. You preserve capital, the upside optionality for retail has been created, and shareholder alignment is intact. In the next couple weeks, we'll see what happens with these warrants, but it's getting pretty exciting. Once again, sitting at $26 at about a $12 billion valuation. Let's go to the moon, everyone. Thanks for watching this short little update on GameStop, and we'll see you on the next one.